Spencer's decision to discontinue loss-making and low-margin outlets to reach operational break-even represents which type of strategic operations decision in the Hayes-Wheelwright model? Your options are: A. Tactical scheduling for cost reduction. B. Structural reconfiguration of the operations network. C. Process-level Kaizen improvement. D. Flexible manufacturing system deployment. And your correct answer is B. Structural reconfiguration of the operations network. Spencer's plan to fund its online business expansion primarily through debt aligns most closely with which principle of the trade-off theory of capital structure? Your options are: A. Firms balance the benefits of debt stacks shield against the risk of financial distress. B. Capital structure has no effect on firm value under perfect market assumptions. C. Firms prefer retained earnings first, then debt, then equity. D. Firms signal undervaluation through leverage increases. And your correct answer is A. Firms balance the benefits of debt stacks shield against the risk of financial distress. By reducing store additions and focusing on optimizing existing formats to improve margins, Spencer's Retail demonstrates characteristics of which strategic orientation under the Miles and Snow strategic typology? Your options are: A. Prospector constantly seeking new opportunities and markets. B. Analyzer balancing efficiency with selective innovation. C. Defender emphasizing stability and efficiency within a narrow domain. D. Reactor responding inconsistently to environmental changes. And your correct answer is C. Defender emphasizing stability and efficiency within a narrow domain. By simultaneously scaling its digital platform, Jiffy, and maintaining physical retail presence, Spencer's Retail is advancing toward which stage in the omni-channel maturity model? Your options are: A. Channel coexistence, where physical and digital channels operate independently. B. Cross-channel coordination with limited data sharing. C. Omni-channel convergence, integrating customer data and experience across touchpoints. D. Channel cannibalization, where online sales substitute physical sales. And your correct answer is C. Omni-channel convergence, integrating customer data and experience across touchpoints. Achieving operational break-even implies that Spencer's Retail has reached the point where your options are: A. EBITDA is higher than gross margin percentage. B. Return on capital employed exceeds the cost of capital. C. Cash inflows exceed depreciation and amortization expenses. D. Total contribution margin equals total fixed costs. And your correct answer is D. Total contribution margin equals total fixed costs. Spencer's quick delivery service Jiffy depends on sub-30-minute delivery through localized operations in cities like West Bengal and Lucknow. This model's supply chain success hinges most critically on which design principle? Your options are: A. Centralized warehousing for national economies of scale. B. Cross-docking efficiency between regional distribution centers. C. Micro-fulfillment hubs and time-space compression near consumption clusters. D. Supplier-driven replenishment through vendor-managed inventory. And your correct answer is C. Micro-fulfillment hubs and time-space compression near consumption clusters. Spencer's practice of monitoring store-level profitability and closing unviable units aligns with which managerial control system under Robert Simon's levers of control framework? Your options are A. Belief systems promoting innovation and vision. B. Boundary systems setting permissible limits. C. Interactive control systems encouraging strategic dialogue. D. Diagnostic control systems measuring outcomes against targets. And the correct answer is option D. Diagnostic control systems measuring outcomes against targets. Managing Spencer's and its subsidiary Nature's basket under a unified operational target of break-even reflects which structural coordination mechanism in organizational design theory? Your options are A. Decentralized divisional autonomy. B. Strategic business unit (SBU) synergy alignment. C. Network organization with distributed authority. D. Centralized command hierarchy. And the correct answer is option B. Strategic business unit (SBU) synergy alignment. The introduction of Jiffy as a rapid delivery extension of Spencer's retail operations best exemplifies which category of innovation under Doblin's 10 types framework? Your options are A. Structure innovation redefining organizational assets. B. Channel innovation changing how offerings reach customers. C. Process innovation re-engineering internal workflows. D. Revenue model innovation altering pricing and income logic. And the correct answer is option B. Channel innovation changing how offerings reach customers. Spencer's CEO publicly discussed debt funding options and operational targets in an earnings call. This practice most directly fulfills which key principle of modern corporate governance frameworks such as SABI's load regulations and OECD guidelines? Your options are A. Equitable treatment of shareholders. B. Timely disclosure and transparency to stakeholders. C. Independent board oversight of capital expenditure. D. Minority shareholder protection mechanisms. And the correct answer is option B. Timely disclosure and transparency to stakeholders.